We got a lot to talk about. And it's not going to be sports. It's going to be all market today. We got to talk about the Tesla event. We got tons of earnings. We got PPI at 835 or PPI at 830. Jonathan Corpete at 835. This is going to be a jam-packed pre-market prep. We're getting it started right now.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Right. Good morning, traders and investors. Let me share my screen. S&P futures down slightly, 6.5 handles, 58.2250. Inside day yesterday. Don't forget about that. Buck flat, 102.77. TLT, holy macro. Someone put a bid in there. It is up 25 cents, but made a new low for the move yesterday, 94.17. Crude stuck in the mid 70 handle, down 69 cents, 75.16. Gold getting a pop ahead of the PPI numbers, up 23.10 at 26.62. Silver back in the 31 handle, up 20 cents, 31.44. Bitcoin futures getting back what they lost yesterday, testing yesterday's high. I'm going to bring in Triple D and Ryan Faluta stepping in today. Dennis, burning that midnight candle. I tell you, you work too much.
I know.
You work too much. I demand that you take some time off next week.
He was killing me with the late start. I'm like, I don't need to be trading 24 hours a day, 7 days a week here, Elon Musk. I mean, 10 o'clock start. He's got the thing going around, and it's making me dizzy watching it because I get like motion sickness. I'm watching this thing spin around and spin around and spin around. And it's like I'm going through some time warps and stuff on the start of it. 10:20, 10:30, 10:40. 10:52, I believe, is when we finally got started on the 10 o'clock show. So it was very late.
Is that disrespectful, Dennis? Is that disrespectful?
Well, there wasn't a reason for it. So there was a reason. He said somebody in the crowd had a medical emergency. So we'll give him a break on the start time. But it definitely, made me tired today because then we obviously had the event. I had to think about what happened after the event. So we did wait a long time for the event. It was really cool. I mean, there was some really cool stuff in there. No doubt it was really cool. Overall, summary though. So okay, we go through. He comes in.
Ryan. Let me ask Ryan what he watched.
Okay. Well, you said no sports.
This, Ryan.
You said no sports, so I'm sorry. That's all I watched yesterday. I watched the Tigers. I watched the football game. I watched a little bit of the Maple Leafs game. I watched the Red Wings game. I didn't watch the event.
Okay.
Not my thing. So I woke up this morning and the first thing I did was I checked Tesla's price, and I admit I laughed a little bit.
Okay, Dennis, take it away with the details.
Yeah, so it comes out in a robo-taxi, obviously, self-driving, no steering wheel. Looks pretty cool. The concept of it all looks really cool. Stock was trading. I'm watching it on IB, which is same market maker as Robinhood, so you're getting the same prices. It was trading at, when the event started, 242, and then started riding. When the event started going, 243, 244, 245, starts, talking about the robo-taxi, starts going into stuff. It went up to 252. So at one point in time, it was up $14 or $13 from the 4 o'clock close. It was up substantially. Humanoids coming out, lots of cool things, lots of cool concepts. I mean, you're right there with that robo-taxi, you're right there with this robo-van he introduced, which looked kind of cool. And then, he gets into, saying, people are starting to ask a little details, but he didn't really get into much detail, and this was the issue. And then the humanoids come out, and then, so lots of cool things happening. But then he says, let's party. And I was like, what do you mean, let's party? I'm like, what do you mean? Let's party. I'm like, where's the detail? Where's the timelines? Where's everything? I turned around and I hit the bid on Robinhood, or the IB Robinhood, the market maker, as quickly as I possibly could. I got short a 2-4. Again, long-term account. So I still have my core position, my long-term account. But I'm in my long-term account, can't trade on IB, so it's like a hedge almost in my Triple D trading account, which trades all the time. Triple D can go long, short, completely separate entity. I'm like, okay. I'm like, this is not good. Let's party. I'm like, that's it? I'm like, so I hit the bid. I got short at 246.98. And I'm like, it just started 246, 245, 244, 243, 242, 241, 240. I covered a little bit at 240. And then I'm like, you know what? I'm just gonna sit back and like just let this like fall because this is just, not what we want to see. So I went all the way down to 230. So I took like 16 and a half points on that trade, and then I covered it in. So I'm still long, like I'm long in the long-term account because I believe in the long-term thesis here. But as a trade, that was a no-brainer sell on the event as soon as he said let's party, because there was no details and there was obviously no timelines really. So I mean, somebody asked about the timelines. He says, yeah, next year, but he's wishy-washy. He says, you know me with timelines. I mean, it just wasn't a lot of detail, not a lot of timelines, and that was definitely going to be a sell the event. Now, with that being said, the humanoids looked really cool. They were serving drinks. They were playing paper, rock, scissors. The movements, I'm really impressed with the movements. It's probably being controlled by like a remote operator at this point in time. There's no way because of speaking and stuff. I mean, there's remote operators controlling these, but the motion, the movements were really good. Like really like impressive that it can pour a drink and hold stuff and do things. I mean, that makes me a little more excited about the whole humanoid aspect of it. So bottom line takeaways are, we are not close to having a robotaxi next year. So this is going to be a hangover from this event. Long term, the concepts are awesome. The humanoid is going to be a driver long term. Musk said in the event that this is going to be the biggest product of anything ever. So I kind of think he's right. I think humanoids are going to be huge. They're 3-4 years away, but I think it's going to be huge. Lots of cool stuff. But again, with no details, no timelines, we didn't learn much new, so it's not surprising the stock reaction. I also, before the event, sold some upside calls because I kind of had a feeling that even if it rallied, I was like, I don't know how they were going to, and I talked about this before, I don't know how they were going to take it, from FSD where we're seeing it now to like having robo-taxis next week. It just wasn't going to happen. We kind of knew that. That's why the stock probably didn't have much of a run-up into the event. Did run up, though, during it. But again, when he gave no details, it was a sell the event situation. Now, does that mean I'm selling all my Tesla and moving out? No, I had some upside calls written, so I'm going to take in some premium. I took some premium from that just expiring today to hedge myself a little bit. I'll be fully exposed to my full Tesla position again come Monday morning because those calls will expire worthless. So I'm still in Tesla long term. Short term, that was a sell the event situation.
Dennis, take a breath there. That was awesome. I got one comment and two questions. First of all, it was an awesome job trading around your core, right? That's something we talk about all the time. That is exactly how it's done. So for those of you taking note here and asking Dennis if he dumped his entire position, no, he did the smarter thing and he traded around his core. So hats off to you. Two questions I have for you. First, the robot, did it have a 6-foot extension cord so it can't chase you?
No, because but they were cool.
That's the feature I'm looking for out of a robot. I'm not putting a robot in my house if it's going to chase me around.
You're worried that we go full term. You've watched too many Terminator movies in your
Dennis, I grew up with the Terminator movies. There's no way you're going to be able to separate that from me. Now, on a more serious note, you're talking about Tesla getting hit here today. There's got to be something that this is a positive for. What is that?
Uber, 100% Uber.
And look, Uber up 5.5% this morning.
Wow.
Yeah, and I wish I didn't think of that last night. All I thought was hit the bid on Tesla. I should have been thinking lift the offer on Uber. So congratulations to those traders who did this last night. Stock is up $4, and it's telling us again that the robotaxi, despite having awesome concepts, and I believe it's going to come, is not coming anytime soon. And that's the hangover that we're getting from this right now. And Uber is the direct beneficiary of this. So Uber breaking out $82 here now. It's a big move for Uber.
And Lyft also up on that news there as well.
Wow.
Lots to take in here, Joel. And you can go some technical levels, maybe Tesla and Uber.
You know what? I'm going to lay off Tesla today, okay? Because I just, I want let people trade it on their own. I'll reset some levels. I gave you the level yesterday, Hugh. So if you were listening yesterday, you wouldn't be asking me for levels today. I said it was all about that 240 area. And right now, that turned into being from decent support to now being major resistance. We'll see. But the buy the dipper is going to come in. As far as the Uber goes, you guys know when you have these kind of moves off like news. I mean, is this immediately better for Uber? Are we going to get better earnings immediately the next quarter? I don't know. So I kind of look at this as like, wow, this is just 82. If 82 was your target, how far is that above the all-time high? That is over $1 over the all-time high. So if you have a target in this area, go ahead and take it. If you had some weekly calls, well, they're going to have some juice on the open. 82.34. Oh, 82.14. This is right at the all-time high here, folks. So keep your head on a swivel at 82. Lyft has always been a dog, an underperformer. So I don't know if you want to be on the laggard here, but that's up 34 cents. There's really no major resistance here. It's not even near 13 yet. I see three highs under $13. But you know what? It's a boon for them, but is it going to be immediate? And that's what I say with that. So, Dennis, do we have any other? We have Lyft, Uber. I looked at some of the other car stocks. They weren't really moving off this. Do you have any other relationship-based trading or any other
Well, I'm long
ideas
at
off this?
Amazon. And the reason is because, again, this is understanding ETF effects, but XLY is going to get hit off of Tesla here today. And the two largest components in the XLY are Tesla and Amazon. And you know how they like to sell. Exactly, Joel. When they sell off one really hard, they buy the other one usually when there's two big ones. And if we just go to the XLY and just break it down for you folks, the XLY is 22% Amazon and 13% Tesla. So when XLY is getting hit because of Tesla, they naturally buy Amazon to offset it a bit because those market makers don't like to move the ETFs. They like the ETFs to stay still. So it's a natural thought. Also, Amazon got a buy rating, I believe, from multiple Pivotal Research. And then there was one last night too. I want to say it was Scotia. I think it was Scotia Bank in Canada gave them a buy rating as well. So there was two buy ratings for Amazon here today too. So, and I'm long Amazon in the long-term account. So I'm long in the long-term account and long in the trading account this morning. In the trading account, I trade out of these things though. So I'll probably be trading out somewhere after the open.
Real quick, Dennis, what do you make of NEO and XPEV both trading down over 2% today? We often hear about China kind of being a competitor for Tesla and whatever Elon's doing. Do you factor that in at all? I understand it's low volume, but both of those stocks are down here this morning.
I think it's just off China here.
I was going to say that
China stocks trading down.
Okay.
And it's just they're all moving together here to a ridiculous level. So we could read in, a little bit more and say, oh well. And again, we've got to kind of analyze: is this really a Tesla like situation where this is just terrible? Tesla's going to zero. I don't think so. I think it's just there was a lot of hype, and it's just the timelines are pushed out further. So I think, this isn't like we can say, everybody just naturally gains and NEO should be trading up because it's a competitor here. Uber's an obvious one. I think China stocks are just all trading together. This market is so algorithmic. It's so algorithmic driven here now that when you've got, obviously you've got the markets, that are interconnected, but it's like ridiculous. China stocks just all move together and the individual stories get lost with the macro picture. So right now, every China stock just doing what every other China stock is doing. It's hard to find individual stories there right now. Bob up, down 1.5%. Baidu, down 1.5%. FXI, down 1.6%. I mean, if you're relationship pairing these things up right now, it's a pair dream because
look at that.
They're so interconnected.
Wow. Dennis, I think you, with these percentages and the way you trade, I think Elon should have rolled you out there as a robot, as a trading robot. But what do we got next, Ryan?
All right, we got bank earnings next. I think we should start probably with JP Morgan, ticker JPM, beat on the top and bottom line, up 1.25% here this morning. What do you make of these bank earnings, folks?
Well, we could start with JP Morgan. And again, we talked about this yesterday. Banks typically do beat. They typically pop on the initial earnings. And then for whatever reason, they usually find a reason to sell these things. We've not seen that happen yet here with JP Morgan this morning. And it was some really nice numbers. And we might as well cover Wells Fargo with it. I think they both broke at 655 this morning, but both are similar reports. Nice beats on the bottom line, slight miss on the top line there. Probably good enough, and probably reporting on the right day here too, where everybody really isn't that excited about tech here today. They're more like, Tesla's kind of poo-pooed the tech party to a certain extent, where you can see a lot of tech stocks, obviously, are showing some weakness, especially Tesla. I I think it's kind of like a value, type of market here today. And I am thinking, so they reported on the right day.
Yeah, boy, this JP Morgan, I have a level. I have this long term. Every time I get nervous about it, it goes up $2-3. So I'm not going to get worried about it. Still recovering from this big red bar day. And I don't know if it was a stress test. Maybe someone can look up in Pro and tell me what that is, but that's just a disastrous day. That was back in September 11th. Just people get buried on a day like that, because I even think it was up on the day, or that was Goldman Sachs. So you're still working your way into the candle. I have to give this 218.5 area 5-star resistance. I'm not really worried about anything else. That's shy of the pre-market high. Got close, 1791. You're already back at 15.5. So I'm looking for a little dipsy doodle. Perhaps a high of the day is in there for JP Morgan. This is a huge move in Wells Fargo. 500,000 shares have traded. Dennis, the other day, someone reached out to you on LinkedIn, and they were asking a question. I know I stepped away for a second. Wasn't it something related to imbalances and the opening and stuff? Because I think this is like an interesting example of Wells Fargo, a really thick stock that trades millions and millions of
Yeah.
shares in a day. I mean, it's up 500,000, and they could probably satisfy the book here. But this is one of these things where, if it opens 60, right at 60, and doesn't catch a 60 bid, look the hell out. Or if it opens at 60 and runs up 30 or 40 cents and then comes back through that area, look out. Is that, do you want to address that at all, or should we move on
I
to our
mean, it's
next?
big levels on big, thick stocks like a Wells Fargo. So it's 60, to your point, Joel, is a natural area where you would think there could be some natural sellers. I mean, think about Warren and Bank America too. I mean, here you got a Bank America lifting 40.56 this morning. It's all excited. Reports next week. And I think you do lift up, but who's just licking their chops to sell into this? It's Warren. He's selling every day. So he's going to be selling here today too. There's a high probability that he's probably selling here today too. And he's been holding the stock down. Eventually, if he ever gets done, stop selling, maybe the stock could go higher. But I think we just have to always be cautious chasing banks when they're up, because once, burn me once, shame on you, burn me twice, shame, or fool me once, shame on you, fool me twice, shame on me. Sorry, I'm tired because I was up all night watching the Tesla event. $60 is huge.
Yeah. Let me make just one additional comment in that. It's called price improvement. So everyone in the book right now at 59, right? Or 59 and a quarter, or 59 and a half, or 59 and three quarters. They're going to get the opening print. They have to satisfy the book. And that's what I talk about. And maybe if someone comes in with 6 million to sell at 59, boom, it opens a little bit lower than everyone expected, and then you get the pop up to 60. But it's called price improvement. It happens on something like a stock on this, and someone just may want to get filled on 3 or 4 million, so they're going to put their order in at like 59 and a half, something like that. So that's a little educational bit here. But any more bank earnings, Ryan?
Yeah, we got Bank of New York Mellon, ticker BK. They're up fractionally here. The bigger moves are in Wells Fargo and JPM, but BK.
All-time high made yesterday. Boom, big move. People buying into the report. Let's see if they sell into the actual news. Dennis,
It's
any
been
comments on that
running and
one?
running. Like, that is like a smooth, like, look at that bank chart and compare it to other banks. I mean, what's going on with bank? None of them look like that. I mean, this is, not
What
a
about my
parasitic regime. I mean,
Comerica? What about, well, that's not as clean.
does it look like that? Not that smooth. This BK just slightly goes up every day. I mean, this has been a very smooth trade higher here. The banks are cheap. Like, well, let's call it what it is. The banks, from a valuation perspective, are very cheap. And we've been slightly moving into this value-oriented market. We've been talking about this. You're seeing some stocks start to get life that, even the laggard trade to a certain extent. The banks are not the laggard trade, but the valuations are cheap. I mean, what's BK's PE? I don't follow the company, but I bet you it's like low. 13 or 12. These things are all, fairly cheap. Banks usually have low PEs. That's 11. So I just guessed.
11.9.
11.9.
Yeah.
So, I mean, these are cheap. If we start to go to a value-oriented market, the banks could show some life for a bit. I don't have a lot of these in my portfolio, but I can't chase them up here either though. Like a Wells Fargo up 3%. You don't make a lot of money buying Wells Fargo up 3% usually.
The other earnings we had was Fastenal, ticker FAST, if you want to go over that as well.
Nuts and bolts of the market. We call that literally because obviously they fastened down the nuts and bolts of the construction industry there. It's having a good day too, up 3-5%. It's telling you construction and obviously a lot of other things that are still going strong here. FAST. So the earnings, trying to bring them up. Did we get the earnings? Yeah. 52 versus top, 51. Yeah. This is slight beat on the top, slight beat on the bottom. Not that great, but they're really ripping this thing higher.
Yeah. I'm a
surprised actually that it's up that much on that report.
Yeah, on 30,000 shares. I believe this got hit off its last two reports. Last time it had the big follow through, came back into the big report, got hit again. I mean, you gotta be looking at this area. I mean, if you got smoked back on April 11th, where you gapped down to 73.53, you got a nice hole to fill there to 74.53. I mean, I'd be a natural seller in between those levels. Of course, if you have a 76 or 77 target, hold up for it, hold up. But only 30 and a half, 30, little over 30,000 shares have traded. Trades, 3.9 million. So, also, I think you check the mood of the market today, depending what happens here in 8 minutes with the PPI. Coming up. If the market, rips off that, you get a little market momentum. But look for that gap fill, 74.53 in Fastenal.
Okay. So what do you think about the PPI? What do you think? What are you expecting here? Especially after what we saw with the CPI?
Oh boy, oh boy, oh boy. I try not to think. I try not to react. So I try to react to it.
I mean, first, maybe you got to digest the move from the CPI yesterday. And obviously, it came in a little bit hot. What really got hit yesterday, we know tech got a pass because we've talked about this before, where tech stocks work in any environment. We predicted this on the show that if they were going to buy something yesterday, it was probably going to be tech stocks. And that's pretty much what they did. I mean, they turned around and the QQQs and NVIDIA turned around and broke out to highs. What did not catch a bid really much was the IWM. And what really got hit was what we said would probably get hit on the show was solar. So we were absolutely correct to say that they're not going to like this solar stocks. First Solar had one of its worst days of the year yesterday. I mean, it was down 15, 16. I think it was down almost 20 points.
It was.
So obviously, if we can get a little relief pop, maybe the PPI comes in cool, you'd think solar right away. But I think the damage is kind of done. I mean, this is, there's multiple things working against solar. One, long-term rates continue to go higher with the TLT going down even again today. But two is a lot of these companies like SEDG and ENPH need lower rates now. And now the Fed's talking about, a quarter max. I think it was Bostic yesterday that said we could even skip the rate cut for this month. I think it was Bostic. I mean, none of that is what the solar stocks want to hear. The solar stocks, if there's any industry that needs lower rates now, it's solar. So market is being very impatient with these stocks for good reason. And I think that it doesn't sound like we're going 50 cut, 50 cut, 50 cut. It sounds like it's going to be a slow process at this point in time. And if inflation starts ticking higher, it could be a no process and we could just be staying at this rate for a while. Solar stocks have a lot of trouble.
Looking at that ENPH chart that you just had up there, Joel, is there a trade there? It actually looks like it's at a support there on the daily. What do you think about that?
There's a double bottom you can lean on, and when I look at stocks that have been in, wait, that's a ways away. 95.21, 95 and a quarter, a couple lows in the 97, 98 area. I mean, I think it's a better place to cover a short than to try a long. But man, look at the monthly here. I mean, it's been stodgy. I think maybe see how it reacts today. And if it can get a positive reaction over the next day, close green, maybe put a couple lows in this area, maybe get a look at it. But man, it's just been if it's a trade the range kind of thing, maybe. But as far as long term, not looking great. First Solar also got Jeffries. I think they lowered their price target on it. I don't know where all these jokers were upgrading it during this entire cycle here. and now they're downgrading it. So just from my pure contrarian nature, if you get 2 or 3 more downgrades, I may look at it from the long side because the analysts got the pump here. They were wrong, and now they're giving it the dump as
First
well.
Solar is best of breed, lots of
It
support at
is.
200, but not the environment
Yeah.
to buy it in right now when the Fed's talking about cooling. And again, we're going to get the PPI. Maybe it changes. One thing as a trader, and this is what I say all the time, is you've got to be constantly adjusting your trades for new information. The new information that came yesterday was the CPI was a little bit hot, which makes the Fed probably a little bit cool to lowering rates, and that's why solar gets hit. Maybe the PPI comes in way cool today, and then you could change your opinion to a certain extent. PPI comes in a little bit hot, that narrative continues. So always be taking in new information. Traders that just trade on purely technicals, and that's it. Pure technicals. I think you miss a lot of good information. Like if I'm trading on pure technicals, I don't make a trade on Tesla last night. I don't that doesn't matter to me. The robotaxi event doesn't matter to me. All that matters to me is the chart. Well, that's dumb. Why would you not take all the information available to you? Charts work well. A lot of times they work really well. A lot of times we take technical trades because they look good. The Celsius trade that I talked about the other day was a technical trade. It looked good. It looked washed out.
Oh.
But I think there's lots of opportunity to do the combo approach. I've never just been just a technical trader, never just a fundamental trader, never just an information trader. Combine it all to get the big picture of everything. That's how you have success as a trader in the stock market.
Yeah, I mean, being able to go against your core position like that, Dennis. I mean, that's one thing, and I've said
Well, it's a no-brainer. So you you have to have I believe in Tesla in the long run. I believe this is going to be $1,000 stock. I believe that's 4 or 5 years away. I've said that all along. 5-year time horizon. I think they're going to figure it out. But there's going to be paths and there's going to be opportunities. And when you see an obvious opportunity where there's no details and there's no timelines, I mean, it was going to say they were going to sell it. As soon as he said, let's party, it went down 17 straight points, Joel. I think I was one of the first people to hit it. Because the algos aren't even probably trading. I don't even, I might have been
algos need sleep,
I might have been
Dennis.
the first sell after he said that. I didn't even hesitate. I'm like, hit the bid.
Hit the bid.
Elon Musk says, let's party. Dennis says, I'll dance, and I'll just start shorting. That's how it's done.
Yeah,
there was just no detail. And then I had a Reuters reporter reaching out to me an hour later, and what'd you think? And I'm like, same thing. I just told you guys. No timelines, no details. That's not going to make them go buy it up to 300, folks. We can be bullish Tesla, but still bearish, on timelines in the short term.
Reuters writer was up that late? Holy
They're up late, these guys. Yeah. Well, he saw me tweeting. So then he's
you're the tweeter. All right, Ryan, preview me. PPI.
All right. You got PPI for September. The estimate is for 1/10. The core is for 2/10. So how are we trading this when this release actually comes out?
Solar. Look at solar. If it comes in hot, Katie bar the door. IWM, solar, those are the ones that are impacted the most. So always look to that. I don't know. We've already got a little bit of a hot CPI number. I think it's going to be more of a nothing burger here today. I'm going wide, cancel all my orders just in case. I don't think we're going to have this drastic move where we're losing 4 or 5 handles. The big number came yesterday. I think this is just maybe going to be a little bit of confirmation if it comes in a little bit hot that, hey, the Fed may cool off. If it comes in light, then it gets interesting, because I think it'll be a bigger rally if it comes in light as opposed to a big sell-off if it comes in hot. Depends.
A lot of resistance. I'm looking just pure technically here. I'll review it. Feel big resistance overhead. If this thing gets a $20 pop, you're popping into the all-time high. You had a daily high. You had an intraday high. You had your all-day closing high in that area. So that is better resistance to look at than support. On the downside here, there's your number. A slight pop, went green for a second. Yesterday's low is 1150. That is the highest low we've ever made. It's a battle at the closing price. The algos are just going buy, sold at 29 even, trying to catch a bid here.
Got to be in line.
Yeah, I got you. I got your numbers here. US PPI month over month for September 0.0 versus the 0.1 estimate. Prior read was 0.2 there. Core PPI month over month for September 0.2 versus the 0.2 estimate in line. Dennis, just as you said, 0.3 was your prior read. So here we go.
Yeah. As soon as you see the chop, like ding, 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 the algo's like, what do we do with this? What do we do with this? This isn't clearly hot. This isn't clearly cold. This is just like just right. It's like the three bears. So if it's just right, we're probably just going to chop you up right now. We'll take you down a little bit. We'll take you up a little bit. We'll take you down a little bit. We'll take you up a little bit, and we'll make some money. That's what the algos do.
More chop than a Benihana, it sounds like. Here we go.
Oh, wow, that is, you're killing me today, man. Maybe you should stay up late more often. You're so funny.
Tired,
Yeah,
so tired.
yeah. I mean, so it looks like I mean, it's not. You had the CPI. You had a little bit of gut reaction down yesterday. The bulls are here. The bull at this moment, as we speak, the bulls are holding that closing price. Did pop up. Did you make a new pre-market high? You matched the pre-market high at 37.75. So I'll just give it long-term investor perspective here. What you want to see today is you want to see this rally continue. You want to see us get up in this 58, 40, 45 area where there's probably just a whole host of buy stops, people trying to pick the high of the move, the high of the century. And then on the downside here, you've already traded through the closing price a lot. So, it's lukewarm support there at 29 even. On the downside, the bulls don't have anything to worry about until we take out the highest low the S&P ever made yesterday, and that was at 58.1150. But I see our guest has been waiting patiently in the background. We need to bring him in. Ryan, do you have the intro here, or do you just want
Sure
to
do.
All right, roll the intro.
Let's bring Jonathan on.
Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. And Jonathan, before I get to the markets, are you a Mets or Yankees fan?
I'm a Mets fan. I grew up in a Mets house. In New York, you're either Mets or Yankees, and it's where your parents grew up. And I've been a Mets fan, disgruntled for quite some time. So this is just a lot of fun. It's a fun team to watch. It's exciting. We're holding on for as long as we can. There's many people out there who have a lot of faith and confidence in the Mets this year. There's just some special aura about them, but we're taking this one day at a time, enjoying what we can.
Yep. Could you bump your volume up just a tad here if you can?
Yeah.
Just bump it up a tad. I'll just say last thing, and then I'll move on from this, is I love the low payroll teams, coming in. You shed all the fat, you get rid of Verlander and Scherzer, and it's the low payroll teams. My Motor City Kitties couldn't pull it out last night, but it was a great game in the Motor City, and I hope to be going back to play those Yankees. But
really quick, Joel, Jonathan, be honest. How much are you rooting for a Mets Yankees World Series?
It'd be exciting. The last time that happened was in 2000, October 2000. My daughter was born a month before, and unfortunately, babies get sick. And I remember sitting in the hospital. She had to spend a few days in the hospital in October, and I missed going to the game. I had tickets for the Subway Series, so I would welcome that. I think if you're Major League Baseball writing up your script, they've got Yankees, Dodgers all set up in place. So we'll see how that plays out. But I think the Mets at this point can really handle anything that's in front of them. We're not wishing for anybody in particular for the next series. We know we're getting on a plane and going out to California. So we'll just take it one day at a time. But Mets, Yankees obviously would be exciting for this city, but I think from the national demographics, it won't be as exciting for others as it would be for us.
Bah, hogwash. I'm from Chicago. That would be the most exciting outcome we could get.
Okay, good.
I do want to see the Kitties make it, but if they don't, give me that Mets Yankees World Series.
There we go.
That'd be really cool.
All right, Jonathan.
Yes, sir.
I know it's early. Q3 earnings season is upon us here. Starting with the banks, which are the banks here. Give us your take on that, the banking sector, the earnings here, and what you're looking for the remainder of Q3 earnings reports.
Yeah, like kind of historically, earnings kind of help our markets a little bit, kind of settles things down. I think over quite some time now, the the economic numbers that we get from earnings aren't as important. It's the outlook moving forward, and we kind of get these benign statements in earnings reports about what the outlook is going to be when you're talking about interest rates and geopolitical issues and exposure that's out there. So I think earnings are great. The season does help. It does add a little euphoria to our markets, but I think we're kind of still in this very benign way of kind of treading of what next quarter is going to look like, what the outlook is going to look like. And I think they, earnings, CFOs use that excuse for uncertainty moving forward, which might spook a little into the markets, and sometimes it is warranted. But I think overall, what we normally hear, what we look for, yes, is the growth, but it's more of the outlook moving forward. And when you're talking about the financials here, financials have had a pretty good run to them. It's somewhat choppy at some point, but I think overall it's good. As we're getting towards the end of the year, it's going to be very exciting to see and interesting to see if M&A activity picks up, right? As we get towards the end of the year, and we've done this before, and it's all kind of tied to, the economy and what's going on there and what's going on in the markets. M&A has been quiet, and we're starting to hear a little bit more now of some of these sideline companies that are starting to kick the tires of starting to go public. It's kind of a weird dynamic in 2024 now, because as the market has performed well throughout the year, and we've had these bumps along the way, and we've taken 2 steps forward and 1 step back. When is that right time? And as we're getting close to an election, 24 days, and as of now, we don't have to debate whether the polls are right, but the polls are saying 50-50-ish. So if you're a company, you're probably more inclined to wait and see what's going to happen. But if M&A activity does pick up, whether it's going to be in the the next quarter or two, or if they punt it down the road, that certainly will help the banks. That will come back. So it might be kind of an early play getting into those banks, because once that M&A activity starts to really pick up and come into play, we're going to see earnings and revenue, and that's for the financials, that's where they make a really decent area of their money. I think that's going to be very beneficial for that sector.
What about your clients? Or do they get excited, for the bank earnings, or is it more excited for like when Netflix starts next week? Like, I just wonder the institutional customer, because years ago we're like, oh, the banks, this is really exciting here. And now the major media, they'll talk about it for the day, but they don't really get the excitement they used to. What about the institutional customer? Are they still excited for bank earnings?
Yeah, I'll kind of date myself, and I think you guys, remember back when Alcoa was the first earning report that used to come out.
Klaus Kleinfeld.
And that was like, okay, this is whatever Alcoa says, that's how earnings season's going to be. So that goes away. Then it went to the financials. Dennis, I think that what you're saying is right. I think we kind of look to the financials. Does it really set the tone? Maybe it does, maybe it doesn't. But then you start really waiting for those big bellwether name stocks, those household names, the Apples, the Amazons, the Netflix, the NVDAs. Those are the ones that really get excitement into the market, both from a recognition point of view. I think people can really relate to that, and also from the fact that whether you agree with it or not, those are names that really kind of move the markets and kind of set the tones for the market. So they're kind of spread out over time. I don't think we get that same lead off batter that we used to get before in the past that would set the tone.
Okay, let's talk about rates. Let's talk about rates here. What do you think of some of the recent data, and what do you think the Fed is going to do here in November?
Yeah, I'm going to say this. It might not be popular. I don't think it matters. I really don't think the economic data matters. We see numbers that come in hot. We see numbers that come in weak. You guys have been talking, for quite some time about how the algos react to this and how the algos move the markets. We see a lot of volatility when these numbers come out. At the end of the day, the Fed has, I believe, a plan in place, and the problem that we get is, you get Jay Powell that gets up there and talks and kind of lays things out a little bit, not tips his cards too much, and then you've got some other members who come out in their speeches, and they come and they say things that might be different, right? So I was having a conversation with a customer yesterday about the economic data that we're getting this week, and he asked me, what do you think the Fed's going to do with this? And I said, well, you could make a case where the Fed's going to look at this economic data and say, okay, we cut 50 basis points. Let's continue to cut 25 on a slow pace. Then you look at the economic data and you're like, well, wait a second, 50 might have been too much. A pause in November might be warranted. You can make a case for either. And when I can make to myself an intellectual case for either, I get to the point where it kind of just doesn't matter at this point. I think people are so washed with all this information, and the truth of the matter is this really comes down to the election. What's going to happen on that day? Is it settled that day? Does this get punted out of uncontested election results down the road? I think people want to get past the election date and know who is going to be in the office and what that administration is going to do. Until we get that type of clarity, and we either again get it on that date, or maybe it's, we're gonna have reruns of what we've seen before of, well, lawsuits and uncontested mail-in votes and hanging chads and stuff like that. If we start to get that, I think this uncertainty just gets pushed down the road. Economic data is helpful. I think if we kind of look at it in a holistic point of view, we've seen interest rates swing from 2% to 7%, and now a little bit coming back and seeing what the impact of that is. We've seen inflation. I don't care what side of the aisle you sit on. We need to get a handle on interest rates. We need to get a handle on inflation. These are things that are going to help our economy grow. It's just we're not at that point of feeling convinced that it's going to go in one way or the other. We've got some Fed members who are saying cut, we're saying pause, we're saying raise, right? So at this point, they're forcing us, and they're forcing my customers to kind of sit on the sidelines and wait this thing out. Unfortunately, or fortunately, as they're sitting and waiting this out, markets continue to trend higher and higher and higher. We have our reasons why we think that's happening. It is an election cycle. We see this when that happens. Maybe it's true, maybe it's inflated. We're going to find that out down the road. So the thought process is, don't put yourself in too much of a position where you can be very much on the wrong side of this overall trade. You're going to have to wait this thing out. And as the market continues to go higher, and as people get their 401k statements and their IRA statements, they're like, wow, my portfolio is up 14% I've only invested in index funds and I'm up 14% this year. Things are good, right? So it's going to have to really play. It's really going to have to play itself out.
Yeah, I'd like to take optimism in that, that there's going to be an outcome, but at this point, it's really hard to have confidence in either party or either, anything that's going on in Washington. But we'll get aside from the politics here. You made an interesting observation here in your notes to me about the disconnect with the VIX here, and here we are. The volatility. Dennis and I have our own volatility index, and that's like our heart, what's pumping, what's going on in the S&Ps here. But or also the average daily ranges. Talk to us about the VIX, the disconnect that you're seeing with the market at all-time highs.
Yeah, the VIX is something that we watch, and I think it's something that's a popular gauge that people do watch. When we've seen the market hits highs before, the VIX has traded between 12 and 15. And now, after we've had this kind of hiccup in the market back in August, and how quickly the market rebounded from that, it doesn't seem to me that the VIX has come down to the levels it should be in parallel with where the markets are. And to me, that's why there's this disconnect. I use 20 in my head. If it's above 20, there's definitely a lot of choppiness and a lot of uncertainty to our market. So yes, there is choppy and uncertainty in our markets right now. We can explain all those reasons why. But that being said, we've got S&P that hit an all-time high 2 sessions ago. We've got other markets that have other indices that have rebounded well. We've got the Russell kind of playing catch up now to where it's getting more in line with those other indices. To me, I feel like the VIX should be trading 5 points lower, and I'm trying to get my hands around, and I'm not there yet as to why it hasn't broken down yet. Maybe we'll start to see some of that now that we're getting through a little bit more of economic data, and the markets are feeling a little bit more comfortable up here. We haven't seen these, besides the other day, we haven't seen like these real massive swings in the market too much. It seems like we kind of find its place. But at this point right now, I'd love to see S&P where it's trading and the VIX below,
Yeah, that's a
significantly
great
17,
point.
16 below, below that 20 level. It's not there yet. So that's leading me to pause and get,
Yeah,
I haven't seen that confirmation.
that's good. Two quick things before you let you go. China, do you believe the rally?
Uh, I don't. I don't believe the rally. It's such a it's such a structured kind of format that they have there, with the significance involvement of their government in all their listed companies and the investments that they have there. They're able to really control what's happening and what's going on there. I think it's a political sign of showing a rally that's happening in China, and that's their way of saying, listen, things are good, we're good, it's all good. But they just infuse so much capital into their markets from the government level, that they can really put it where they want. You can make that same debate about the Middle East and oil. They love oil when it's trading within a certain range, and whenever it gets out of that range, it kind of comes back in, whether it's above 80 or below 60, they get it back to where they want. So I'm not a firm believer of what we're seeing out of China is actually, in fact, an accurate vision of what's happening.
One more thing, geopolitical situation here. I mean, Dennis and I talk about it going back and forth, and our buddy, talked about it's like the stock market and like everything else, and the stock market keeps going. Geopolitical concerns, or is that something that you just have to put the blinkers on for?
No, I think geopolitical concerns is probably one of our biggest threats that's out there. We see what's happening in Israel. We see what's happening with Russia, Ukraine. We've got this headline that keeps popping itself up between China and Taiwan. These are real scenarios that the United States can get pulled into, both financially and physically. We cannot have our blinders up to those. I think that's a significant risk that's in our markets. Our economic data here in the U.S. can get interest rates back down. We can get unemployment to levels. We can get mortgage rates to a level. If we get to a nice sweet spot there and then get pulled into a situation that's going to escalate, that we're going to need to be more a part of, I think that's going to overshadow anything that we're doing here domestically. So, from a geopolitical point of view, from a political point of view, and you're talking about, campaign topics and administrations, I think our geopolitical exposure is one of the biggest items that's out there that we need to keep an eye on.
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, joining us from the comforts of his own home on
Yes,
this
sir.
Friday, opposed to the floor. Jonathan, number one, thanks for joining us early. Number
Thank you.
two, thanks for the great information, and we're going to be dialing you up again next month. Thanks
Love it.
again,
Have a great weekend,
Jonathan.
guys. Let's go Mets.
All right, let's go, Todd.
Let's
That is, the algos are just going like this and
Yeah,
unchanged.
they're all over the place on this number. Do want to get to disaster sector of the day here, and it's going to be energy and VST and CEG specifically here because they're really getting hit hard here now. CEG trading down 9 points, was trading down last night. Vistra, and these have been darlings of the market, coming off hard here. It's down 6% VST. Headline is Google and Amazon, Microsoft, Meta, fighting a proposal by an Ohio power company to significantly increase the upfront energy costs they'll pay for their data centers. So they want cheaper energy. So this is where American Electric Power Ohio, and this is getting, obviously now talking and moving into other stocks in the energy sector here as well. I know if you want to look further, Public Services Energy Group, PEG, that's down significantly as well. So we've got some significant selling pressure here in nuclear specifically, and CEG and VST as well.
I mean, we talked about those historical moves in the utilities. I mean, just way like
It's been
Fari
crazy.
Hamzy, like how many Sigma out are you out on these? So I just looked at the CG. I mean, you kind of got two warning shots in the last 3 days, those big, thick red candles. So that's a little bit of a warning. Three red candles in a row. I mean, with these kind of things, I mean, you hate to have to sell into weakness, but like if you want to lock in some profits, you're going to have to sell into weakness less in today's session. I look at the just technically, I'm looking in the area here in Vista. Let's call it 114 and change, 115. You had multiple lows in that area. Maybe some people that are stuck on shorts will look at that. CEG, also, that's trading down. Nothing here. Your next daily low comes in at 51.28. You did breach that in the pre-market. So see if the bulls defend 250. Also, I saw there was extraordinary option buying activity yesterday in these stocks. So someone got a little bit carried away here on the call side, and sometimes that can be a tipping point. But these XLU, I mean, we talked about this move that it's had. What this is a lawsuit. What happens to lawsuits? Well, lawsuits go to court. Whatever happens, it takes some time. But the immediate reaction, knee-jerk reaction right now is to hit the sell button.
All right. You want to take a look at some analyst ratings next here, Joel or Dennis?
Yeah, if you want to jump into it, yeah, we've done a pretty good job here. The last stock I just had on my list, and then my list is exhausted here, was to cover Celsius a little bit more because we said on the show yesterday, I think the bottom is in. It was about 32. Now it's up at 35.30, so it's looking even more like I may be correct with that assumption here. I did buy Elf Beauty. We talked about this yesterday too. Not that Celsius and Elf have anything fundamentally to do with each other, but they were both these growth darlings that have cooled off the growth and come down to valuations that aren't that crazy anymore. So I put Elf on for a swing trade here. I bought it yesterday at 104.70. It's up a little bit in this thing, leaning on the 100. Below 100, I would stop out. But I think there could be room. Celsius showing some life. I think that's good news for Elf. And so yesterday, decent move in a pretty tough tape for most of the day. So like the move in Elf.
Okay, you know what, Dennis? I'm actually going to take the other side of that there. This is what makes them market. I think Elf returns to 100. I think it cracks it. Look for 95 to 90 on the downside if we do break 100 on
Why?
Elf.
Why?
Just because I think that's where the support level is. If you take a look back from
why go back to it?
What's that?
Why are you going back to it? What's the catalyst to drive it back down there?
I just don't think, I don't think there's going to be as much spending on Elf. No, I don't hate the stock. This isn't a meta situation. I just think Elf sure looks like this wants to go lower. Maybe it does hold 100 here. I think that round number gets retested to the downside, though. I don't think it's just one test and bounce. If it is, what's your upside target on that? Just out of curiosity.
Just under 120. So I was looking at all this. So I'm looking at it. I was risking 4. I would probably, so I always like the 2-to-1 risk reward, Ryan. So I entered at 104.70. I'm risking $5. So I'd like to get 10 on it. So 114 would be probably where I start to lighten up. And then if we're obviously, can continue, 120 would be my target on this.
I think
the only reason for me buying it, not that I like the company, not that I like anything about it, just that Celsius is showing some life and you're starting to see this laggard trade start to turn around. So I feel like there's a laggard trade happening here. I also feel like, we're halfway through October. We'll start to get through a tougher part of the market. I'm just not that bearish stocks right now.
Okay, I think if you don't get back over 110 here on Elf, you're probably going to roll back over. RSI was kind of oversold when you got that little bounce off of 100, but if it doesn't keep going up, if it doesn't change that trend, I think you got another retest coming.
Ryan wants to get into my account and hit the sell button for me. Take
no.
Right now.
You've only done that a couple times in my account, Dennis. I know.
He can do it. He can just short the stock because then they borrow it from me, and then he's actually the technique. He can do it. So that'll be interesting. So it's Ryan versus Dennis. I like this.
Yeah, no, this is the first time I've gone against you, so we'll see how this plays out.
You'll have
to bring me scared. Ryan's a great trader, so he's got me thinking.
All right. What did Goldman Sachs say about NVIDIA? I think that there was just a price target raise, correct? For NVIDIA today, I
didn't see anything from.
I believe here, Joe. Let me double check that. I believe that is the case. It's only a price target change.
Goldman list price target sees 11% upside. Price target up to 150. So that's the news for NVIDIA here today. There's a price target raise. It seems like every day on NVIDIA. That's just like par for the course. Was there any other good ratings there, Ryan?
Well, it depends what you're looking for. What do you have, Joel? Because I want to talk about PanW, but what do you have?
I want to do this one first. And it's not CAGR. What's the symbol? I put
CAPR. CAPR.
CAPR.
That's the Wainwright. Okay, gotcha.
Dennis, I don't think I've ever seen this before. Okay. This is HC Wainwright. We all know HC Wainwright.
Yeah, they
Okay.
make aggressive little calls on short.
Okay. On Wednesday, they reiterated their buy on Capricorn Therapeutics and maintained their $40 price target. Okay. That was on Wednesday.
Okay.
On today, they raised their price target to 77.
Really?
So
they reiterate 2 days ago, and then everything changed in the last 2 days. Everything changed.
And where there was some submission, I see some data, so they did that Wednesday afternoon.
Very
but
interesting.
Friday morning, yes. I don't know. I've seen them be right on some stuff like this. So I'm not.
They make aggressive little calls. It's a little boutique firm that makes aggressive calls in small market capitalization stocks. So you can't ignore them. They go out there and they make their calls. They're going to be right around. I mean, they make bold calls, and I kind of like the analysts to just come out and make bold calls. This $17 stocks going to 77. I mean, there's a call for you, as opposed to Goldman Sachs analyst raises price target from NVIDIA from 145 to 150. I mean, that's boring. This is kind of exciting, Ryan. What do you think of this CAPR?
Yeah, I mean, look. Well, first of all, CAPR has been a wonderful trader. We've actually been trading that in the live trading show for like 2 weeks now. But the whole thing with Wainwright, I mean, 2 days apart. So we reiterate, go to 40, then we maintain, go to 77. By the way, Pro has HC Wainwright with an overall success rate of 37% on some of those upgrades there. So Dennis, I'm with you in terms of like sticking your neck out.
Do you have that in Pro? Show us how to do that. Take 3 minutes. Show us how to do that in Pro. I want to see that.
All right.
That's
got it.
That's a cool feature. I didn't even know that was in there.
So when you, let me get this right up here. Okay. So when you view any stock here, when you go to our analyst ratings calendar, one of the columns here is going to be overall success rate. We also give a smart score. That's a Benzinga proprietary rating on how good the analysts actually are. That's 52.65 here. But the success rating, this is going to be how many times do their calls actually move to the price target within the 12 to 18 month window.
Yeah. Okay, that's on. So we see that so just scroll in because I'm blind. I'm like leaning in with my glasses, but it's all blurry there. Can we blow that up a little bit and just show us how to add that?
Sure. This is going to be in your analyst ratings calendar. Yep. And the thing is if you're on blind mode like this, Dennis, you might have to zoom in a little bit here. Yep. Also, make sure that column is turned on. There's a number of columns that you can pick and choose what you want.
What's the column called?
Overall success rate.
That's pretty cool. That's a cool feature. Who's the
Ryan,
best? Is there a way to filter this to see who the best is?
Yes, but I don't have it handy here, so just give me a second. I'll let you know what that is.
Okay.
And you had a rating you wanted to discuss, Ryan?
Well, I wanted to ask you guys about a firm, because a firm also got, and this thing has been running like crazy. I think this is real trouble. I think the buy now, pay later, the entire thing is real trouble. I understand our firm just got added to Apple Pay recently, which is bullish for the company. That's fine. But I wanted to get your opinion, both of you, your opinions on a firm, whether it's a trade or what you think about the company.
It's hot right now as a trade. Even Kramer's on the bandwagon. The chart looks pretty darn good too. Above 45 would be in breakout mode again, so you can't argue with that. I don't know about the concept where we just, lend money to anybody and they'll pay us eventually here. I've never been a huge fan of the concept, but I tell you, the trade actually looks pretty good here right now. I mean, if you're in it, probably stop yourself out under 37, which is pretty far. But I mean, this actually is starting to turn hot here again, a firm. So I kind of like it.
I'll take you. I'll go with you, Ryan. And I'll just look at this technically here. You had just this crazy move from 36, 48, right? 12-point move. You're getting back half of the move, but you are making a lower high here. So I'm looking at this double top here. If I was in this stock, this 43.70, 40 up to 44, I like to see that clear that with some gusto. Establish a base here at 44. And make attempt to make a new high for the move. So I don't like the lower high coming off the recent high of the move. So that's what I'm looking at. On the downside here, if you're trying to protect profits from this major run, I'm not worried about the recent low of the move under $38, but you got almost a matching double bottom here at 41.55, or it's actually 53 and 63. So good support, still in the up mode if you can hold that level.
India, just to say, India lost a huge investor there yesterday, kind of like the Warren Buffett of India. Ratan Tata passed away yesterday. So just I had a friend where reaching out. He wanted to shout out that we could shout that out. And, obviously he's done a lot over there in India, philanthropist, did a lot. He passed away, I believe, actually, it was 2 days ago now. So they lost a big one there.
Okay, I see a couple of comments here about Monday. Folks, Monday is Columbus Day and Indigenous Peoples Day. We have a show. We are open. The market is not closed. It is not a holiday. So unfortunately, you're going to have to get up after your football hangover, for those of you that like sports, of course. But Joel, who do we have as a guest coming on Monday?
Well, a little change up here. I know we have the options expiration on Friday, but CC, Legator, our options guy, needs to come on Monday. So it will be some time for some option education on Monday. That's it. And you know what? I'm not going to give any technical levels for today, Dennis. You know how I'm going to end the show?
No.
Let's party.
Let's party. Let's party. That ended the party for the Tesla stock. It ended the party. I do think eventually I'm not going to be a hero here and say, yeah, I'm coming in and buying this dip right away on Tesla. Wait for some stabilization, that's the way I am, is like when the thing gets hit, there's going to be a hangover effect here. We didn't get any timelines. We didn't get a lot of details. We got a lot of cool things were there. And I think the long-term picture of Tesla is still going to be very good. That's why I'm still holding the very long-term core position. But short-term, this is going to, take a little while to get over this.
Okay, really quick, Dennis, Tesla, is it a car company or a tech company? What do you say?
It's a tech company, 100%. Okay. And if you follow this show for 10 years, you could see the evolution in myself, because I was like, this is a car company. It's a car company. It's a car company. It's no longer a car company. If you did watch that event last night, there's no doubt it's a tech company. They're working on really cool stuff. It's just too far out here yet. Chris Camillo, I saw him tweet out and he said, one day I'm going to be very long levered Tesla, but today is not that day.
Okay,
I kind of agree. I'm long Tesla some, but I'd like to be really heavily levered long one day too. One day we're going to get really big on Tesla, but right now it's a big position for me, but I still think stuff's a ways out.
One day, but that day is not today. Okay, folks, thanks again for having me on. Appreciate it. Thanks everyone for joining us. Ryan. Have a great weekend. We're going to be back on Monday. Live trading with me starts next. Let's party.
Like